What is up, traders? Welcome to the official Trade Talk channel, where I show you how I analyze price for the most consistent and higher probable entries to help you guys become better traders. Today's video, we're going to be talking about Bitcoin and a potential bullish bounce getting ready to occur. If that sounds good to you, make sure you smash that like button and stick around until the end. We got a lot of fantastic stuff we're going to be talking about in today's upload. So with that, let's get started. All right, so here we have Bitcoin on the weekly chart. This is the spot market. I am using Coinbase for most of my analysis reasons because it is one of the most heavily traded exchange out there. So the price action is pretty decent. Not a lot of gaps, if you will. But here we go. We are working on a 9th weekly close. Now, this has never happened in Bitcoin's history. In its entire history, we have never had 9 weeks closing bearishly in succession. So we do still have that, that bearish influence, that sell side in the market still, if you will, but it does look like it is exhausting itself, and we have a few metrics we can look at to basically see that. All right, so here we are on the Bitcoin futures, the CME chart, that we do have a lot of bearish closes in a row. 1, 2, 3, 4, 5, 6, 7, 8, 9. So 9 weekly closes on the CME. This has only happened one time before, and it was with 8 weekly closes. We did not get the 9th. Over here, if I go back to the early history of CME, this thing didn't get started until the 2017, 2018 top. This is when this started trading. So a lot of people blamed the CME for causing the downside on Bitcoin, when we know now that that wasn't even close to being accurate. But right here, you can see that we have 1, 2, 3, 4, 5, 6, 7, 8 weekly closes in a row before we got a big bullish bounce. Now, this big bullish bounce also was the low of the bear market. Is this the bear market low because it was over here and we're getting similar price action? My answer to you is probably not, but we are looking for the bounce. Let's go look at a couple indicators that will show us why it probably isn't the lows. All right, so this indicator is going to be very familiar to some, especially the people that's been following me for a while. This indicator is called the MVRV score. Basically what it does is it takes the realized cap and the market cap, divides them, and you get this orange oscillator. Now, this orange oscillator has called bear market lows in Bitcoin's entire history. Anytime you get in this green zone down here, you are considered undervalued, and that is typically when you want to be a buyer. If you look over here, you can see that we're just hovering over the undervalued region. Now, is it possible that Bitcoin finds all the demand it needs here and doesn't go down into that green area or hit undervalued defined by the MVRV score? Absolutely, it's 100% possible. These are just indicators. They are not the holy grails. All right, so another indicator that we can look at to see if we're in a bear market or if this is the bear market low is the VIX. Now, obviously, I understand that this is a volatility metric that is used on the S&P 500, but since Bitcoin and the S&P 500 have been trading similar in the bear market, they are similar because they are both risk assets, then we can use the VIX to determine if we're in potential bear market lows or not. Now, on this indicator, or not indicator, this is actually price action chart that you can trade. You can buy options on this. You can do whatever you want. It is a tradable asset. You can see that bear market lows are typically called when the VIX has an explosive move to the upside and then comes off of it. So all these little red circles were bear market lows. Now, I'm not saying that, each one of these areas, the SPX was in a, confirmed bear market of being 20% off or lower. I'm just saying that typically on your downside moves, the VIX will rise. And when the VIX peaks out or tops out, that has typically been a good place to become a buyer on the SPX. But this has also caught a couple of the massive moves that we've seen in the past. Now, these were all, considered a nice big dip in the SPX. This is 2008. That is your blow off top or the bear market low from 2008 market cycle crash. Another blow off top. So each one of these blow off tops have essentially called every single one of SPX's main declines. So anything that looked like it could potentially see more downside, 10% or lower, you have seen this phenomenon play out on the VIX. Then over here was the last one we got. That was, of course, March February, March 2020 when we had the pandemic. Now here we currently are. Does this look like we are looking for a bear market low on the VIX? The answer to that question is no, it doesn't. So yes, we're going to be looking for a bullish bounce on Bitcoin, but we're only going to trade that to the upside until we find resistance again. Once we find resistance again, we will position ourselves short for one final run, that capitulation bottom, if you will, to mark the end of Bitcoin's bear market cycle. I just don't think we're there yet, and we have a little bit of evidence to suggest it's not. So with that being said, let's move on. All right, so I have the US 10-year government bond pulled up. What we're looking at here is resistance. You can see that we traded right up into weekly resistance there, tagged it, and we're seeing that pullback. Now this thing typically is going lower when the markets are doing good, when everything is bullish and happy and hunky-dory. This asset trades to the downside. When it starts to get bullish, that typically means that we're seeing volatility expansion to the downside on all risk assets. So people flee out of your risky assets, SPY, stocks, Bitcoin, and they come into bonds. That is why you get the pump. Now we are into resistance, and this could mark the very end. This could start to look like a top. So this is just another chart that we can look at and say, yeah, it looks like the bear market may be getting close to an end, but we may not be there just yet. However, it's just another indicator, right? That's all we're doing. We're comparing all the data that we have to make good logical trading decisions. Here we have the Bitcoin options at the money implied volatility. Now this is off the exchange Deribit. They're one of the leading exchanges for trading options on Bitcoin and other cryptos. So we're looking at this metric because it's implied volatility. It's the same thing as the VIX, but only in line form, and it's on Glassnode. So you can see that they got a nice expansion as Bitcoin came in near to the lows, but since it's been in the lows over in here, you can see that volatility is compressing because price is compressing. So if we put a support region over here, we'll call that the last support on a 4-hour time frame. You can see that we haven't even gotten down there to test that level just yet, but we did smoke this low here. We still haven't gotten a close below it on the 4-hour, but the other day we did see a spike and a run below all of these swing lows. We can see that price is oscillating and getting tighter and tighter. Now this is good. The reason this is good is this lets us know that we're probably going to see a move one way or the other. Now here's the open interest strike price, so we can see that this is for the expiration to July the 29th, 2022. It's 2 months out. You can see that the put buying was massive. We can also look at this on the put to call open interest. You can see that the orange line was increasing as price was going lower. We got short here, and so other people were getting short there by buying puts. We have seen potentially a top and a lower high here. Now here, this is interesting. These are people speculating out to the end of the year, and you can see that the call buying volume is much more than the put buying volumes. We could potentially, this doesn't mean price is going to go up, but we can see that speculators are buying way out the money calls. Volatility is getting crushed. That means premium is getting cheaper. People are speculating by buying calls. We are seeing puts come off a little bit. We are trading in a descending wedge or descending triangle, whatever you want to call it. These patterns typically break out to the upside. Case in point, last time we had one playing out here on the weekly, we got that next run to the old all-time highs. Now this one took weeks and weeks to play out, about 8 or 9 weeks there. We were only 3 weeks into this one. So typically the size of your pattern will basically determine the breakout size. And you can see this pattern is very tiny. So a breakout and retest of monthly support at $35,000 would be absolutely perfect for me to look for resistance at that point and then get the final stab lower, the capitulation, to run Bitcoin down into undervalued. But right now we are going to be looking to position ourselves long. Each single spike is getting sold into. So this pattern is running out of room. If it does run out of room and still don't get a breakout, then it just means that price action is going to continue to be range bound and choppy. If that is the case, we do have top end and bottom end ranges, so that way we can take trades. Resistance 31,290.05 for the top end of daily res. Daily support's going to be 28,559.25. So that's going to be the low end of the range. A close below this would indicate lower prices. We did get a daily close below daily support yesterday. We are testing yesterday's open right now. So the short trade today would have been there. Doesn't mean you won't get stopped out. No, it just means if you're going to take a trade and you're trying to trade this range, you want to be selling resistance and buying support. And so far you are getting a bearish reaction off of yesterday's opening price. So we are going to look for this to get higher, maybe a bullish engulfing, then we will look for support to buy, because I'm assuming that this pattern is going to break out pretty soon and we're going to get that test of 35K. Once again, last week I said that I am targeting 35K for a specific reason. It's not just the fact that there's an unfilled gap up there on the CME. It is also because it is the high end of this big candles range. We'll look for either the high of that candles to be our target, or if we're going to see more downside continuation, we will target that week low. So that's what we're looking for. Moving on, next week we're going to be neutral / bullish, looking for support to potentially buy a breakout. We will be targeting this weekly capitulation candles high for the potential bullish target. All right. But once again, there is a gap there on the CME. I'll show it to you just in case you missed it. Right there is the gap. That the low edge of the gap comes in at 34.44. Then the high end of that gap comes in at 35.170. So that comes in line with not last week's, but 2 weeks, the capitulation weekly high. This candle's high comes in line with that on the spot market. It also comes in line with monthly support there. Boom, 35.060. So this looks like this is probably going to be the top end of the bounce. Then we'll get maybe one more big bearish candle down. But we don't, if we get a monthly close above that, then we're going to be looking for higher prices. It's as simple as that. All right, guys, hopefully this video helps. If it did, like I said in the beginning, make sure you smash that like button. If you're new to the channel and you haven't subscribed, consider doing so. You guys have a fantastic day. Make sure you trade safe, make sure you trade smart, and as always, happy trading, everybody.